move in and out, but we're here.
Hey
All right.
guys, fortunately, if we didn't start this an hour and a half earlier, because an hour and a half earlier, the Tampa Bay Buccaneers boat parade with the
Oh,
team
you.
and was right behind me, and there was just horn. It sounded like you're in the middle of the Fifth Avenue during a parade. It was insanity. You would not have been able to hear me. So I'm glad this was. It just ended like 30 minutes ago. It was crazy.
Well, they have. I mean, first time in history, right? I mean, some
Second,
pretty
second, second Super
second
Bowl they
time.
won, but there's it's a beautiful day down here, and there's literally like 1,000, maybe 2,000 boats outside my window right now. It's
Wow.
crazy. It's total insanity. It's very
Well,
cool, but
it's appropriate because we call Kendall now the Tom Brady of RegA. He used to just be the quarterback, but now we've elevated it, especially more apropos for kind of his hometown. So that's going forward going to be how we introduce him.
Well, you've seen that picture by Tom Brady, right? Like, I think it's like this, the one with all the rings.
Running out of fingers. Yeah.
Right.
Yeah. So what are we going to do for Kendall? We're going to have to get some like A rings.
I need another hand.
Well, he's very selective. He's very selective with his clients, so I think he still has a couple extra fingers.
I've got 3 more to go. That's about it. I'll start using my toes, then we'll be fine.
Well, yeah, you have to elevate it. You have to elevate it to the next stage. All right. So, okay, we are now on live on YouTube. So let's get the motor rolling. And good afternoon, everyone, and welcome once again to the KoreSummit Webinar Series 2021. My name is Oscar Joffrey, and we want to welcome you this afternoon to another one great topic. We're going to have how can Canadian companies use RegA? I mean, obviously it's a bit little touchy for me, but it's great. Being a Canadian and all, I'm joined by 2 great individuals that you've seen here on our summits before. And once again, because they obviously been involved with so many of them, they have so much to share with you, and we will get to that. The format is very simple. We have a kind of a conversation, 45 minutes. The last few webinars have been going beyond an hour because, of course, the conversations are so great. But don't forget as well, all the webinars are recorded. They're available to you at the KoreSummit.io website. You can view at any given time. And of course, all the speakers' information, contact details, email address, so you can reach out to them directly and begin the dialogue. So, like always, we like to make sure that everybody gets to know who each of the speakers are, the panelists today. We have 2 great ones. Let's start with yourself, Kendall. Let's get the ball rolling, say hello, and introduce yourself.
Hi, I'm Kendall Almarico, and we're going to make this webinar far less than 45 minutes because the answer to the question is Canadian companies file just like US companies, and then you go through the process, and then you go sell shares. So we're done. I think the seminar's over. Do you have any other questions? I'm ready to take them. Just kidding. There's probably some other things to talk about. I'm sure Etan has some things, but I am a securities lawyer by trade. Most people refer to me as the least lawyer-like lawyer that they've ever met. I'm wearing my lawyer costume today. I actually put on a button-down shirt instead of my Hawaiian shirt and flip-flops, but I tend to do a lot more than just be a lawyer. There's a lot of great securities lawyers out there who do Regulation A and Regulation CF and all these Jobs Act offerings. As far as I know, I'm the only one who goes beyond that. And my clients, I take on a dual role. I'm not just their securities lawyer who handles all the securities law stuff, but I also act as the quarterback of the offering. And what does that mean? Well, I live here in Tampa, so let me give a Tom Brady analogy. Tom Brady walks on the field with a team, Tampa Bay Buccaneers, who hadn't been in the playoffs for 18 years. Tom Brady takes them to and wins the Super Bowl. You need a leader on your team, someone who can get in front of this, knows all the people involved, knows how to make it work, knows all the moving pieces, not just the legal part, but knows how to market it, knows how to get it into publications, knows how to do all of those things. And so my role typically is far different than most lawyers. I do both roles, and I love that part. I'm much more of an entrepreneur at heart than a lawyer. And so I love getting my hands dirty and scrubbing in with the founders of a company, or even a company that I represent, companies that are worth over $1 billion, the board of directors of those companies, and making these things happen.
Perfect. Mr. Butler.
Etan Butler here. I am the chairman at Dalmore Group. We are a FINRA and SEC registered broker-dealer investment bank headquartered in New York, founded in 2005. We have investment banking roots and an obsession with many of the Jobs Act-born exemptions, including Regulation D, 506C, Regulation CF, and what we're here to talk about today, Regulation A. It's been a busy 18 months for our firm, having onboarded just about 100 at this point RegA offerings. Included in those have been many of the most successful RegA offerings in history, meaning those who have hit their full maximum offering objectives and are now either launching another RegA or who have gone public or in the process of going public. It's a fascinating space to be in. We love it. Our obsession is really to fully empower the issuer to be able to take full control of their own capital raising activities in a cost-effective and an efficient way, and to share with them what we have seen work and not work so well, given the number of transactions that we've been working on.
You know, Tom Brady and so Eitan, you like football? So which player are you going to be? So, you know, I'm sorry, I'd love to do the Brady spot, but it's okay.
Steelers. I mean, I grew up my father's from Pittsburgh, so we were Steelers fans. So we didn't really like Tom Brady because the Steelers enjoyed 6 rings, right? So that was our thing. We had 6 championships, and then we watched Tom Brady, who I actually called Kendall the Tom Brady of RegA, because he's known as the quarterback because he plays a lot of roles, and I've seen that in action. Actually, we've been fortunate to be the broker dealer on a number of Kendall's high profile RegAs. So Tom Brady was a little bit of a difficult one to watch, given that his previous team kind of matched our record. But fortunately, he left and he went to Florida. But anyway, so I would consider myself the Steelers. That's kind of, we grew up with the terrible towel at home watching the Steelers games.
But the Steelers, they kept fighting every time. They never gave up,
right?
Never give up.
I will say that Eitan also is the person who taught me how to deflate the footballs so I could hold them better in the cold air. But I think that we're not going to talk about it. I don't think FINRA wants to hear about that. It's not compliant.
Oh my goodness. All right. So the topic at hand today is, how can Canadian companies use this amazing regulation, which they already are. I mean, but a vast majority are, they're still stumped by it. They really are. I've now done more presentations in Canada than I have in a very long time. What caught my surprise, and this is why I think this is so important, and it just putting it out there. So the legal community was even up to date on the regulation. So if that becomes a barrier, then you see how it trickles down. It trickles down to the company, to everybody else surrounding it. So they're getting mixed signals, and it's kind of weird. I don't know how that could happen, but you know what? We always think that everything flows down. So today we're going to unravel that, and I think Kendall, you started it correctly. It's very simple. The regulation says U.S. and Canadian companies, and you follow it, and you're where you go.
Right.
Simple,
and
right?
it is really relatively simple, and I say that half jokingly because the real problem is educating people and also making sure that you do things in a compliant manner in both countries. Obviously, Regulation A is a United States securities law. It's not a Canadian securities law. It's not in any of the provinces of Canada. It's a U.S. federal law, which means that the U.S. government decided that for this particular law, we were going to allow Canadian companies to use it also, which is a relatively unique thing for the U.S. government to do. In fact, the other parts of the Jobs Act, they didn't extend the same courtesy for no apparent reason. But the fact is, that's why I think that a lot of Canadian attorneys are confused by it. I went to law school. I didn't study anything about Canadian law when I was in law school. So just the same thing, Canadian attorneys don't probably study a whole lot of US securities law. And so when you start doing something that crosses borders, people get a little scared and a little sketchy about doing it. But the reality is, the good news is we have the SEC here, and I know, and FINRA and Eitan can talk about this too. If you do things the right way, which is the hallmark of doing anything in the securities world, it's the most highly regulated world of law that we have in the United States, you got to follow the rules. And there's a lot of rules. There's 672 pages of rules for Regulation A just for the SEC alone. And then you have 50 different states that have rules. And then you have all the Canadian provinces that have rules. But if you follow the rules, which Tom Brady doesn't always do, and give him a pass since he won a Super Bowl here, you do have to do that. And that's why people get a little intimidated. It's not the law of your country up there in Canada, but it's a great law that you can use, and it gives you access, 32 million population, I believe, in Canada versus 300 million plus in the United States that now you have access to through this law. And that's accredited investors as well as regular folks, everyday people, mom and pops, retail investors, whatever you want to call them. Anyone can invest in these offerings. And that's what's so magical about it. And that's why people in Canada, companies in Canada really should pay a lot of attention to and figure out how to use this, because a whole lot of companies are using it successfully already up there. Many, many more in the US are using it successfully. And it's a real game changer.
I agree. And hopefully today that'll be part of it. I just want to, before I get to you, Tom, because I know you deal with the companies after they've gone through the legal part, and usually with Canadian companies, it's the legal part that kind of becomes a little bit of a roadblock, if you can believe it. It's the weirdest thing on earth. It's not the accounts, because audit is an audit. It's the legal. But where I want to touch base here on the legal part is that Regulation A was around a long time ago. You wrote a great post for us. Thank you. You may recall last year for the KoreSummit. Remember, I told you the number one question people were asking. So what's this Regulation A plus? I thought it was RegA. I think that thing was dead, right? Do you recall that?
Yeah.
And you wrote a blog about it, and we posted it. It's been great. Can we give a recap? Because I think that might be part of the issue.
Happy to do it. And believe me, there's people still in the US confused about it. I speak publicly a lot. And back in the days before COVID, I traveled a lot and spoke in front of a lot of large groups around the world, not just in the US, talking about Regulation A. And I would routinely get up on stage with other lawyers on a panel and have a lawyer who's a securities lawyer say, well, Regulation A and Regulation A plus are different. And I'm saying, no, they're the exact same law. There is no difference. And I even got into a little bit of a verbal tussle with one lawyer who was a bit of a smartass on stage once, I'll never forget, where he said, there is no such thing as Regulation A plus. There's just Regulation A. And Mr. Almarico keeps referring to it as Regulation A plus, which doesn't exist. So I pulled out the SEC's website and read him the very page called Regulation A plus. They call it Regulation A plus. So long story short is they're the same law. Regulation A has been around for a long, long time. And it's a law that allowed a company to go out and raise money from the general public without becoming a public company. You could sell stock to the public. But what you could actually generally solicit, advertise, and market. But you were only allowed to raise $5 million, and you had to go through state by state, blue sky compliance, which turned it into basically a public offering that cost you $1 million to do in legal fees and compliance fees to raise $5 million, and nobody would do that. So in 2012, part of the Jobs Act, the part I was most excited about and glommed onto immediately, as opposed to the part everyone else was talking about, the crowdfunding part, the smaller law, was the fact that this was going to allow companies that are, not just startups, but startups and growing companies and even now public companies to raise up to $50 million. And in a few weeks, it's going to go up to $75 million from the general public. And you don't have to go through state by state blue sky compliance. So it's the same law. The reason they call it Regulation A plus and the SEC refers to it as Regulation A plus is because it's a new version of an old law. Regulation A is still Regulation A, but the colloquial name for it is Regulation A plus or Reg A plus, because it's the old law plus a little bit more. That's really all it comes down to. Same law, different day.
Yeah, and of course, and people have that memory of the old RegA where, oh my God, it's so cost prohibitive. There's no way anybody would use it.
Nobody.
And I think, nobody.
I think statistically, I used to tell people in 2011, because I think that was the last year I had stats for it before the Jobs Act in 2012. I think that there was one, and I may have this wrong now because it's been 10 years and my brain is fried from alcohol from the Super Bowl this weekend here in Tampa. But I think there was one company that used Regulation A in 2011 versus billions of dollars going through Reg D and all the other exempt versions of raising capital. So it was just never used by anybody because it just made no sense to use it except in very, very limited circumstances.
So one takeaway that I'm gonna obviously because we're gonna push it forward, but for any Canadian company, obviously you're gonna hear those mixed signals. So the key is this is a well, written, as Kendall indicated, you simply need to go to Google, search for Regulation A Plus, and it'll take you to the SEC website. You can point that to. Once a lawyer sees it and reads it, they'll understand it. There are lawyers who are now getting behind it, and which is really great. But we do understand that that is part of a barrier. And Canada is unique in something else. And I don't know if you knew this, Itan, but share this with you. When you work with Kendall, Kendall can be in Palm Beach, Miami, Los Angeles, and Kendall is able to provide the legal services for all of USA. That's a very, as an entrepreneur, I never appreciated that until, the last 10 years. I love that. In Canada, that's not how it works. So we keep blaming regulators. And so I'm not going to go down on your profession, but we keep blaming regulators why we have 13 of them. But we have a fundamental flaw in how lawyers are giving their articles or they're past the bar. They're provincially regulated. So if you have a lawyer in Alberta, they're not able to provide you advice in British Columbia or Ontario. So that's where the confusion becomes, where you could start with a lawyer, our lawyers in Alberta, he's come full verse. We now need to talk to somebody in Ontario, and we now got to spend the time to educate this lawyer to get updated. But once that's done, the real key is, the bottom line to all this, Canadian company can use the regulation. It's not a legal issue anymore. The Canadian lawyer does play a role in this part, but it is the US lawyer that is actually doing the filing of the Form 1A, correct?
Yeah, and just one more thing, because I feel like this has become the Kendall show, and Itan has far more interesting things to talk about than I do.
No,
but you're right in one sense, in that people that practice federal securities law and Regulation A Plus, whatever you want to call it, is a federal law. People that practice in that area, like I do, can cross into all 50 states and other countries and whatever we need to do without having to be licensed in every one of those states. I'm only licensed to practice law in the state of Florida. And yet I practice federal law with companies that are literally all over the world and from states that I've never even been to. But, and this is a big but, so if anyone from the Florida bar or any of the other bars are listening, I don't cross the line into giving state law advice. So much like my Canadian counterparts up north of us, if a question arises as to California law or arises as to Montana law, a state regulator in Missouri asks a question about our Regulation A offering, I can talk to them from a federal law standpoint, but that's where a state licensed securities lawyer in that state would have to get involved if there was any kind of issue. And this is why, and I get to the point of why Regulation A didn't work back before 2012. You had to go to every single state in the United States with the old RegA, go to their securities law department, file paperwork with them, go through a review process. Sometimes that was a merit review where they looked at every single document, just like the SEC does, and gave you comments and went back and forth. And in many cases, that meant you had to hire a lawyer in all 50 states. Reality isn't that that's the case, but in most cases, you had to hire multiple lawyers who then had to coordinate with each other, because if Kansas tells me to change one word and New York tells me to leave that word in and add a different word, ultimately you got to have the same version everywhere. And so it was a nightmare. You just couldn't do it. And so anyway, that's why preempting the state's ability to do that and just saying, you know what, federal government's going to look at this, the SEC is going to review it, the SEC is going to make comments and qualify it and make you change things that they don't like. The SEC doesn't say that it's good or it's a great investment or that you should invest in it or anything like that, or even say it's a great valid offer. All they do is they qualify it before you can go live, meaning you've been through their review process. And if there's something in there that shouldn't be in there, pretty good chance they're going to make you take it out. So long story short is, you're right, Oscar, it's a different animal up north. However, we have a bit of that here also that applies to Regulation A and can come up depending on, when you're marketing in a state or a state securities regulator has a question about something. In some cases, yeah, even though I'm the general attorney for the offering, I may have to bring in some help from a locally licensed attorney. It happens very, very rarely, but it does happen.
Good to know. It's a bit of an education for me there, but thank you.
it's a pretty
And
esoteric point. I mean, it's not, it hasn't happened most of the time. It
but
doesn't
it,
happen
but
at all,
it's so
but it
great.
can happen. It can happen.
I know, but it's so great, to go for, to talk to a broker deal, a lawyer, and you move forward. And now we're going to move into it done, because it's interesting enough. In the same way, lawyers are regulated, broker dealers are regulated the same way in Canada, if you can believe it. But it is what it is. I mean, it's the opportunity. I guess maybe that's a better way I'm going to present it is that. There are different markets, and this is a market, and I'm going to move with you, Tom, now, because the broker dealer role is something. Even though you're Canadian or U.S. company, it isn't going to change. But let me ask you a couple questions. So, Canadian company, you're obviously working with Kendall or another legal mind into it. What more are you doing from a broker dealer that you need to do in order to ensure, or are you treating it just like a U.S. company when they're coming to you to engage your services?
From an issuer perspective, it's pretty much the same as if they were in the U.S. or Canada. I'll tell you what does come up is, hey, can we raise money from Canadian investors? That's the real question.
Yes.
And can we raise money from international investors in general? And that's a very interesting question, because going back to what Kendall said, remember that RegA is a U.S. exemption. And if you go outside of the U.S., you need to make sure you follow the laws of the jurisdiction that you're conducting securities related activities in. So that's more of an interesting question that we see, not as much, hey, can we raise funds here? We hear it sometimes with CF, right? Because CF, you don't have that ability for Canadian companies to access being able to use CF like they do for RegA. It's more, can we raise money from Canadian investors? And we defer to a collection of what we consider the thought leaders in the legal and regulatory community for these questions. And so it's the answer. And so what's interesting about Canada in particular is that most crowdfunding platforms and broker dealers, even on their sites, will say, don't accept, we don't work with Canadian investors, right? Because I think there's the Ontario province, I think is known for maybe exploring the use of RegA across the border and may have not been happy with that at a certain point. And that kind of triggered somewhat of an alarm. And so I think the advice that we give folks that ask that question is, you have 300 and some odd million people to target. If it's that important for you really to set up shop and look in Canada, then you should probably seek a Canadian equivalent of a broker dealer there and structure an offering that works in that jurisdiction, right? And then how that works with your RegA, you let the attorneys communicate. There's best practices, there's opportunities there. That's more what comes up.
That's a great point. I'm going to share my personal experience because both of you know our plans are to do it. You're right, it's a numbers game. Everything's data driven. Kendall, you said 300 million. Canada, 32 million. The math is pretty simple from the data driven side. Cost wise, I would have to spend the same amount in Canada, and the investor would never get the same rights. Meaning the American investor has a free trading security that can trade now in a secondary market. They can transfer it. Here, they couldn't do anything with it. They would be on a lockdown, and you would have to file in every province. And so I tell Canadian companies, as a Canadian company, it's regrettable, but it is. I'm not going to offer my securities under the RegA to Canadians. But here is the beauty of it. Doesn't mean you can't attract them and keep their names and not, because on secondary market, interesting enough, the Canadian laws are different. I know it's going to be really funny. The primary race is one, but the secondary rules in Canada are different. It allows the Canadian investor, non-accredited, to hop the border and buy securities from a Canadian company because it didn't come through the primary race, it came through a secondary. So there are upsides to that, but on the primary, from the cost perspective and return, in my view, the numbers just don't make sense unless you have a fairly large following. But that following is going to get very distraught as soon as they see that the RegA investors are treated very different than the Canadians, because you're going to be wrapped around this thing called an offering memorandum. And that OM wrapper that everybody calls it, a wrapper on the RegA, it's not a wrapper. It's like a choker. boom, you know, because this one's free willy and this one doesn't get to move anywhere. A lot of people didn't know that. And hopefully, I heard the same, Itan, that with Ontario, the friendly provinces right now are British Columbia and Alberta. They love RegA. In fact, they were the two provinces that allow the companies. They've actually created an exemption to allow a Canadian company to freely use the exemption. But they also say you can't sell the securities, but at least you can go forward. So
Oscar, you might want to, I was just thinking about this with all the services that KoreConnex provides. One of the things you should think about is a service where you guys kind of maybe cross the border and sell securities for Canadian people, and then also pick up orders from Americans to buy, you know, prescription drugs and bring them back. So that way you could have like a fair, you know, it seems like a good deal for you. I'm not doing it, of course, Ben. I'm not sure it's legal, but maybe you should look into it.
Yeah, no, it's a fair comment. It's a fair comment.
Yeah.
All right. So we've talked about the legals. We've talked about the broker dealer. So one part about the broker dealer, because it is very different. So in Canada, typically when you do a capital raise, you know, you're paying your BD, say 7 to 10% plus warrants and everything else. So let's talk. I don't want to go in specifically, but the role of a BD in a RegA is significantly different than the way we think of it from a Reg D point of view. And that's also another, if you can provide the insight to that, Itan.
Yeah, so when most people hear the word broker-dealer, they think investment banking fees, which are appropriate if the broker-dealer is performing certain roles as far as capital raising and marketing and distribution and syndication. But the most basic role that a broker-dealer plays in a RegA is simply to be the broker-dealer of record, which allows for the company to make their offering available in all 50 states, really through a box check on the 1A filing, provided that the broker-dealer is nationally registered in all states. And as a result of that, at least from our perspective, the fees should go down significantly to reflect that role that the broker-dealer is playing at a minimum. If the broker-dealer obviously is raising capital for the offering, either from retail investors or from institutions, family offices, et cetera, then more traditional investment banking like rates are appropriate. If the broker-dealer services include really quarterbacking the marketing effort and the investor relations and the communications and are a lot more extensive like we do with some of our clients as well, then you're going to see, you know, more appropriately priced commissions. But ultimately, it's to perform due diligence on the issuer, on the officers, on the directors, to make sure you're not working with any bad actors. It's really to protect the investors at the end of the day, and to allow for the regulators to have someone who's accountable to come to and say, give me that, show me that, what about that? And for everything to be ready for them to serve when they come and ask, because they do. They audit. The good thing about working in the regulated world is that there's no shortcuts. If, you know, we've been a broker dealer for 16 years, you know, you have to make the decisions you make today are going to be the agenda of tomorrow, right? So that's the beauty of the SEC and FINRA, I find, is that, you know, it forces transparency and accountability. So that's really why someone would hire a broker dealer to conduct an offering in what I consider a way more buttoned up way, to have someone that is overseeing and collecting the KYC, the know your customer, the suitability, the OFAC checks, to making sure all these subscription agreements are signed properly, that all the attestations are made properly, to review all of the advertising, right? All the promotions and the advertising. If an issuer tries to do that directly, okay, let's say, you know, it could be, you know, that's where there's risk, right? So to have someone that kind of, it's almost like an insurance wrapper, you know, to have a regulated entity that really has that responsibility and is going to be challenged and audited to make sure they did it properly. So that's the primary role of the BD.
You took it away from me, because I was going to say the best thing about having a broker dealer is the insurance policy, right? It is the best. And one of the areas that most people may not be aware, of course, in Canada, you may not, is that there are 7 states they call the trouble states. But what they really means is that you do need to have a registered broker dealer to do it anyway. So if you're going to do it for those 7, do it for all. You get the whole package, you know, fully insured. That way you don't have to worry about it. And particularly when you consider that the SEC does not work like the 13 Canadian regulators. And so I'm going to touch up a little bit on that because it's important for people from Canada that are listening into this, is that the Canadian regulators believe in what we call slap in the hand. Kendall, you've been a bad boy. Don't do it again. Okay.
It's never happened. Never happened.
Never happened. Great.
Never. Don't even know what that's like.
Yeah,
I'm glad you told me. You've probably heard it, but I've never had it happen.
Yeah,
I really haven't. But I like Joe. You're right. There. That's the problem you have, Oscar. Is there are regulators who will come and maybe slap your hand or maybe slap you in jail. That's why you do things by the rules. That's why you have a broker dealer. You hit the nail on the head when you said there are problem states here in the United States. And let me expound on that just real quickly, because I wrote the law. Anyone who reads the stuff I wrote, I used to write the crowdfunding and Jobs Act column for Entrepreneur. I typically write at a very elementary school level because the stuff we deal with is very complicated and most people don't want to hear about it. They just want to know the basics. And so I try to write very simply when I write about stuff. If you read stuff on my website, you're going to be like, oh, I understand this. Not, wow, let me read 600 pages of crap. On the other hand, I got asked the question so many times the first few years that the Jobs Act was out, do you need a broker dealer to do a Regulation A offering? I mean, I was getting asked this question every day, 10 times. So I wrote a short version, a one pager, that was exactly what you said. There's 7 states, 8 states, whatever it is, that you need to be registered as a dealer. And then I wrote a 38-page legal brief that I published on Medium. That's still, I think, the most read thing I've ever written, and people still ask me questions about it. But it goes into incredible detail of why you can get in a whole lot of trouble. And I'll boil it down here because I think it is relatively interesting for people to understand. Let's say that, first of all, Regulation A does not say you need to have a broker dealer. And so people just assumed you could do this without a broker dealer from the very beginning. Everyone thought we don't need a broker dealer involved. And I was like, well, you do. And here's why. When you go into certain states, and I won't go into all the details of the states, but let's just say they're pretty much the biggest states that you sell securities out of, pretty much the big ones, all have a requirement that if you don't use a FINRA licensed broker dealer who is registered as a broker dealer in that state, you cannot sell securities in that state publicly, can't go to the general public, or you can't solicit in some states to the general public unless you, the company yourself, registers as, in essence, a dealer or a broker dealer. So what does that mean? Yeah, you could avoid hiring Eitan's company. You don't have to use Delmore Group. But you got to go into 7 or 8 states and get registered to do exactly what he does. And that probably will cost you 1,000 times what it'll cost to hire a broker dealer. Just in the legal fees alone, getting registered as a dealer to be able to sell securities in a state publicly, that's what we mean when we say they're problem states. These states don't let you do that. And so what happens if you just say, well, let's see if we can sneak this one by and not tell them about it and start selling? All it takes is one person to contact and complain. And these offerings are very public. They're advertised. They're all over Facebook. They're all over Google. You're getting fed ads every day for these types of things. And so someone's going to complain. Someone's going to notice it. Someone's going to look it up. And then guess what happens? The state securities regulator, who has an unlimited budget to protect little old ladies' nest eggs, comes knocking on your door and says, who's your broker dealer? We don't have one. Did you register as a dealer here? No, I didn't know I needed to do that. Well, guess what? Give us all the money back. Give every investor their money back. We're going to slap you with a fine. We're going to prevent you from ever raising capital in our state again. The list goes on that they will do, and they will do it. They're not going to just slap you on the wrist. They're going to say, you're a bad actor. And now, if you're a bad actor in one state, you may not be able to raise capital in any state or with the SEC the next time you need to. So there's huge repercussions to doing this wrong, as opposed to, let me just pay someone what they're supposed to be paid to do and let them be your insurance policy, check off all the boxes for you, help you get through the process and do it the right way.
Thank you for that. That was a great explanation. Obviously, we're all advocates within the ecosystem in the US with our RegA to ensure that every offering is done, and the success of Dalmore has been making sure that every company has that element, because otherwise the consequences are going to be felt. And all of us are watching out. The whole industry is watching out to make sure that all of this is done. So now we heard the legals. So now from a legal's perspective, it can be done. There's some little hoops that you're going to need to do, educate your lawyers, but once you get through that, boom, because they do need to be part of it. So make no mistake, you do need your Canadian lawyer, because the US lawyer is going to need to talk to them to verify your book of records and stuff. So you can't leave them out of the picture. So that's one. Number two, broker dealer. Insurance policy, that's great, but it's the other elements that they're doing for you, watching over your back, making sure you're doing things right, because you're going to be drawing eyeballs to your site and to your offering. You want to make sure you do it right. The third piece is the audit fee. So audit, obviously, whether you're a startup or you're an operational business, you need audited financial statements 2 years. And there is a difference between Canada and the United States. US is GAAP and Canada is IFRS. So, I'll go to you first. Is that a difference to you? Is that the audited doesn't matter to you in the investor base? It's never been an issue?
Truth is, I don't really get too involved in what that difference is. So I'm not very familiar with what you just mentioned as far as differences. Our compliance team really handles that. My understanding has always been that every RegA company needs 2 years audited financials if they've been in business for 2 years. If they've been in business 1 year, they need 1 year. If they are a startup, you still need to kind of audit nothing, right? So it's a nominal fee just to kind of go through that exercise. But as far as the differences, as far as the accounting differences between the US and Canada, I'm going to defer to Kendall on that.
Yeah, and let me reiterate something that Eitan just said that's very important. I hear people constantly say you have to have 2 years of audited financials. And I've actually had companies that came to me and said, we didn't do this because someone told us we had to have 2 years of audited financials and our company's less than 2 years old. So we waited until we were 2 years old. That is not the law. But there's lawyers that tell people that. And you said it yourself, Oscar, but you didn't mean it that way. People hear you've got to have 2 years, and their thought is, some CFO somewhere who doesn't understand securities laws and didn't bother to read it or ask someone goes, we're not even 2 years old. We can't do that. So it is up to 2 years if you've been in business for, more than 2 years, but Eitan said it right. So I've had companies that we've used Regulation A that were brand new. They were spinoffs of other companies, or they were brand new, newly formed. They had a zero balance sheet, literally nothing, but that has to be audited. And if they've been in business for a year or less than 2 years, everything has to be audited. There's very specific time frames that you follow, and the auditors know them. After a certain date, you have to go back to do the next 6 months, blah, blah, blah. But following those is important. And yeah, they made the rules very clear and very specific. The only thing you didn't add under the Canadian laws, if you're a Canadian company, you have to follow a certain guideline. In Canada, if you're a US company, it's to GAAP, or GAS, which is generally accepted auditing, S, whatever the hell it is. But more importantly, if you're a public company, or if you're going to be listed, and you're going to have your financials have to be, for something that's going to be traded, then they have to be PCAOB, which is another level of review. So bottom line is, these are the kinds of things your lawyer can tell you about. The compliance people at your broker dealer will tell you about. When you go to the auditor, they have to be independent. It can't be this one I get all the time. Oh, no, I've got a great bookkeeper. He does all our stuff, and our CPA does our taxes. They'll do it for less than, no. The person who prepares your books and the person who is your staff accountant or your accounting firm who does your taxes, they prepare your financials to GAAP, generally accepted accounting practices, and then they ship them off to an independent person who audits it. They can't do the audit also. So there's always an expense involved in doing this. But again, if you're a brand new company and it's a zero balance sheet, it's not that much money to be able to take advantage of the Regulation A fun stuff you can do there.
Yeah, the only closing point I'll make here is that as a Canadian company, we don't need to create them for GAAP. We can use IFRS, SEC accept both, which is great. Right there, you only got one set of book of records to create, not two, but you do need to use an independent auditor, PC Obviously the lawyers in the US will tell you exactly what that is. I do apologize, I can't remember either, but it has to be a registered accounting firm. The good thing is in Canada, I believe there's about 8 or 9 accounting firms now that have done it. We've seen names like BDO, Dunwoody, some of the small mid-size, so it's cost effective for companies. So I think what we're starting to see is the momentum. The education is starting to work, but we want to make sure everybody understands all the parts. So we got the legals, we got the BD, we got the audit, we filed, we've been qualified. So you notice I've learned a thing or two from a few years ago. I used to say we've been approved. So that's not the word. The word is qualified. Thank you. So now we're qualified, and I'm coming to you, Etan. Canadian companies, there are some differences. Money's money, but there are some differences in techniques and things. We are seeing a model that is a bit different, where Canadian companies are using providers to bring in the client acquisition, or taking in calls with providers in Canada. How does that all fit in with a broker dealer to make sure that it's fully compliant? Because we don't see that with US companies, right? This is what's a little bit different in Canada, I believe, at the moment.
Well, 2 things. One is, in addition to SEC qualification, which is not approval, the issuer, the company would also need their broker-dealer to get something from FINRA called a no objections letter, right? So
that's right.
Generally, right after your securities attorney files your 1A, your offering circular with the SEC, starting a process of, they have 28 days to respond. They usually will ask you some questions. So there's back and forth. Generally, it's about a 60-day or so process on average, from our experience. We, as your broker-dealer, are also filing with FINRA looking for a no objections letter. So we file our broker-dealer agreement with you, and they have the opportunity to review it, ask any questions they might have. And then once you have both the qualification and the no objections, then you could go live and start accepting funds from investors. As far as investor acquisitions and Canadian companies that have been using companies for IR, I think it applies both to Canadian and US companies. I think what you're referring to are, when you're doing a high volume RegA offering, you tend to be very sensitive on conversion. And every step in the process is important to monitor. For every dollar I spend, how much am I generating in revenue from my offering? Technology is a big factor in that, right? To properly monitor investor activity and behavior, tagging certain pages so you know which marketing and PR strategies are working most effectively, so you could kind of pour more gasoline on those, while the ones that aren't converting or performing well, you could tap the brakes on those strategies. And also staying in touch with these potential investors, these hundreds or thousands of investors. You need to do so in an automated way, ideally, right? So if they are at stage 2, at a stage 5 of the investment process, meaning they've clicked on invest now, but they didn't sign their subscription agreement, or they didn't put their credit card in, or they forgot to do a wire, you want to get back to those people. You just paid a lot of money to bring them to step 1, step 2. You don't want to, you want to make sure that you have an intelligent way of shepherding them through the process to complete the offering, right? And you could do that in an automated way by reminding people and being annoying to, hey, excuse me, I know I just reached out yesterday, but here we are again. You're at stage 2. You need to complete this. This is where you are, or unsubscribe if you don't want to hear from me anymore, right? So that's an automated way. And then there's IR in a more human way, right? Some people, like, even if it's a $500 investment, they just like knowing that there's someone that's going to answer the phone if they call, or perhaps someone that calls them and says, hey, just wanted to let you know that, we sent you a few emails, but you haven't finished your process. So the issuer could do that themselves, right? The issuer is allowed, if they have enough people, right, to call people up and say, hey, so-and-so, I'm from the company. I see that you've started the process. Could I answer any basic questions you have? The broker-dealer could do that, if you engage the broker-dealer to do that, or you could hire a third party. But if you hire a third party, you need to make sure that they are compliant, right? If they're not a registered broker-dealer, then there's limitations as far as the role that they could play. If they're simply serving as an extension of the company to shepherd people through step 1 to step 2 to step 3, that's fine. If they're trying to sell them securities, and certainly if they want to be compensated for the sale of those securities, that's absolutely not acceptable, right? So I think we're seeing the utilization of IR, of third-party IR, both from Canadian and from U.S. issuers. But you just need to make sure that you're careful. The broker-dealer needs to make sure that it's careful, et cetera, because you don't want people that are not registered trying to sell people. And you want the structure of that relationship to be compliant as well. So it's very clear what they can and can't do and how they are paid versus how they can't get paid.
Yeah, and that's a great point. That's going back to what we said earlier with having a broker dealer, that insurance policy, and obviously it will come down on you, obviously, but nobody wants that, right? Because obviously you want to be in business, and we're closely monitoring it. But that is one difference I saw, and you are right. I think we're going to see a little bit more of it now that you can raise up to 75 million. It does up to state. We do need more forces coming in, trying different channels. If we keep using the same channels, after a while, it's just going to run dry, right? I mean, there is, up to 300 million Americans, and if we've only touched a little bit of it, clearly we got to try different approaches. So I'm all for that. And obviously, the key is to make sure that it's done fully compliant. So one part here that is uniquely, I'm not going to say uniquely different, but it is black. I like U.S. law. Look, I'm a Canadian and I truly like it. You know why? Because as an entrepreneur, I know how I can walk. I know who I need to speak to. I know where I need to speak to. I know how to do the offering. I know what I can and cannot do to use it. So versus, somebody comes to me, Oscar, I want to help you with your capital raise. My question is very simple. Are you registered for a broker dealer? No. Okay, great. Well, then no commissions, but you want to help me build up my plan, I can play your flat fee. It's pretty black and white that way. We have a market north, of course. We have that it's a bit loose. And some companies, they keep, come on, Oscar, we're still a Canadian company. Well, coming back to what Kendall said, certain regulators will give you a slap. This regulator in the United States, the minute you file a Form 1A, correct me if I'm wrong here, Kendall, but I believe the SEC has, we've shown what the SEC will do. We'll go to Canada, arrest a Canadian right in their doorsteps for breaking securities law, right? I mean, you break it, you break it.
Yeah, I mean, that's why you follow the laws. And getting back to you're absolutely right. That's why you just don't take chances. Just do things the right way. I mean, I have fired clients before and clients that raised a lot of money after I fired them because they weren't doing things the right way. And I just can't, I don't want to be a part of it, and you just don't do that. But I would like to say something because, Eitan hit the nail on the head. No matter where you're at, and this is, I'm going to take off my lawyer hat and put back on my quarterback helmet, or whatever I want to call it. This really is all about marketing. Regulation A, unless you've got a built-in audience of people just waiting to buy your stock, which I haven't found that client yet, and when I do, I'll be thrilled. You got to go out and find investors. And so it's all about marketing, and marketing is a very generic term that could mean about 20 different things, and every company does it differently. And there's a lot of different people out there that provide different services. I mean, just off the top of my head, I'm going to give you an example. So we launched, and Eitan's Dalmore Group is involved with this one, a company called EVO, Evolution Development Group, about 10 days ago. I think it may have been 2 weeks ago. EVO is a very unique and cool business. And the reason I bring this up is I'm going to tell you all the different marketing pieces that go into this to get an audience for a business that nobody knew who they were or what they did up until about 2 weeks ago. So this is a company that will go out and sign race car drivers, boxers, MMA fighters, tennis players, golfers, individual sport athletes, provide them with the financing to get training, extra time driving cars at the racetrack, extra time in the gym, extra time on the practice courts or on the fields, get them up through the ranks to where they become, in some cases, some won't make it, some will, but they could become champions. And when you get a champion who wins the Indy 500 or wins the World Boxing title or wins a PGA tournament, part of those winnings will go back to the shareholders of EVO. The contract that EVO has with each athlete will be, You give us a piece of your future earnings, and we help you get to that stage by financially supporting you with nutritionists and sports psychologists and trainers and everything else. So it's a fascinating business model that, to my knowledge, has never been done. It's been done with rich people. Rich people have been benefactors for golfers and boxers and race car drivers for years, but not the average person who can invest $150 and own a piece of several athletes as the business develops. Now, I bring that up, and I'm going to, anyone who wants to look at this page, it will you're going to see what I'm about to talk about now. So the investment page where people invest is evoinvest.com, evoinvest.com. And when you go to that page, you're going to see 3 different videos that explain the business. They're professionally made. You look at them and you go, wow, I understand this business model. You're going to see a video of Michael Andretti of the Andretti Autosports fame, Mario's son, who is a shareholder in the company and on the board of advisors, who has said, this is something that's going to get every driver that we can bring into this fold the chance to actually become a champion. Today, they made an announcement that Alexander Rossi, the Indy 500 winner from a couple of years back, has invested in the company and has joined the board of advisors. Now, what does that mean from you as a company out there? Nobody has heard of this company before. You're selling a company that's brand new, that doesn't have the drivers or boxers or golfers yet, but they're going to get them with the money they raise. And it's going to be like venture capital. Some of them are going to make it, some of them aren't. But to get that word out, there's digital advertising, there's videos, there's social media, there's public relations. I think Alexander Rossi is doing 4 different major interviews today about Evo. There is, digital ads on not just Facebook, but Google and what have you. There's email marketing. There is, as Eitan said, there's people following up with text messages and phones to people going through the system. There's an automated system taking all the people in. There are emails going to those people to close, people that forget to bring their money in or what have you. There is banking involved. There is escrow involved. There are so many moving pieces here that have to work together and coordinate so that it all comes out in the end and looks like evoinvest.com, which looks like this super slick professional page that you read and you're like, wow, this looks great. This is a really cool company. I want to learn more. That's what you're trying to get people to do, is to click the button to learn more. And then if they're interested and it makes sense for them to invest. But there's so many pieces that go into doing that the right way on a consumer play like this. Whereas if you're a company that already has a list of 1 million, customers, and all you're doing is raising money from those people, your marketing might just be one email that you send out. So building a brand, building a customer base, using RegA not only as a capital raise, but also as customer acquisition requires a huge number of different disciplines working together to make it all work. And that applies in Canada or in the United States.
Thank you for that, for sharing that. It is a great site. I've been to it. I've been following them for a long time.
It's really cool stuff. And again, but as I tell people, I would never tell anybody to invest in any company, my clients, but this is, to me, it's like venture capital for professional athletes. Instead of you saying, hey, I'm going to watch the sports on TV over the weekend, you're going to be able to watch and go, once they sign some drivers and what have you, they may sign 10 people and 9 of them may never make a dime, but one of them may be the next, Tiger Woods or some crazy thing like that. And all of a sudden there's a payoff. It's really like a venture capital firm going, I'm going to invest in 10 different companies. And if one of them makes it, it's worth it. But the reality is, the cool part is anybody can do it. It's not a very big investment at $150. And what do you get to do? You get to follow these kids coming up through the ranks. You get to get inside information. You get to see stuff behind it. There's a whole architecture of stuff that goes on, even if the kids don't ever make it and make money. So it's these kinds of thought processes that when you're out there with a company and you're going out to raise money with RegA, especially if you have to build something from scratch, you've got to think through that there's a lot of things you're going to do that you've got to do anyway to market your company, but you can kind of pile them into this way where now you can get people to join you. We already have, Evo already has people posting on their Facebook page the links to invest in the company because they're so excited that they got involved. So That's what you want to do. You want to build excitement, but all of that takes a lot of different people working together with different disciplines, doing the different things all at the same time the right way.
Yeah, it's a great point, and it's perfect for us because we've gone through all the different elements in one of the areas that I think, regardless of where you come from, but again, because we don't do this enough in Canada, and you're not accustomed to it, where we don't do general solicitation yet. The regulations allow us to do it, but we're always told not to. But here, you're hearing it from a lawyer. Look how pumped up he is about. So what you're hearing is when you budget for this, you're going to find it's not the lawyers that are taking all the fees, or the accountants, or the broker dealer, the insurance policy. It's the dollars and cents you're putting towards your investor acquisition to attract that audience. Because if you don't do that, somebody was asking me, well, what's it like? Well, there's a needle in a haystack. That's one part, but I'm going to go one layer. Where's the haystack? That's the point. You are on the internet. The internet is massive now. It's not like it was in 99 or mid 2000. We're in 2021. The internet's getting bigger and bigger, more crowded every day. People are getting emails from everything. So you have to have a compelling story and it's not, hey, I got shares for 55 cents, come and buy them. And, no, that's a great, and there are many great companies. Golden Seed is another one that I really enjoyed. I've been speaking about those videos for a long time, because for the very first time, we saw a cannabis company not do smoke. I don't know if you saw that, Itan. I really enjoyed that, because it felt wholesome, taking an industry that some people have a problem with. And I understand that. I respect that. But they took it, and you saw real people working the farm, right? And so I think it's an important element that everyone, in particular, regardless where you're from, is that you take into consideration. So it's been great talking to the both of you. Tom, you and I were a little bit quieter with Tom Brady.
When Tom Brady's in town, you'd have to listen.
I'm sorry. I'm so hyped up after winning the Super Bowl, and my 7th ring that I stomped all over you guys. I apologize. I won't do it next time.
No, I think this is my second time I get to sit in front of Oscar with one of these this week. So it's becoming more and more frequent. So the stage is yours, brother.
Yeah, the thing about discussions sometimes is they take different directions. I kind of had one other, but look, at the end of the day, what we're telling Canadian companies, you can do it. What we're telling Canadian companies, follow the rules. What we're telling everybody in Canada is, please speak to your professionals. This is not one you can do it on your own. You think you can, as Kendall said, but why even try? And more importantly, come prepared. Come prepared to this game. That is phenomenal, because there are some great Canadian companies that Kendall's worked with. I know Itan has worked with a few that have been very successful using this. And the last part I'm going to add, you don't need to go public after you raise your money. Okay, so don't get caught up in that thing to get listed on the TSXV or CSE, which is don't. You can grow your business, because what's the beauty of RegA, Kendall? This is you got the best repeat customer of all time. So, which is you can do it year after year after year.
Absolutely. Don't go public. This should not be a vehicle to go public unless you're ready to go public. And most companies that are doing this are not ready to go public. I talk more companies out of going public than you can imagine. And they eventually thank me, because they're like, wow, we should thank you. I just hear that all the time. But some companies, it's perfect for going public. If this is the max they could raise, it could be a great vehicle to do that too. You just need to think this through.
Yeah, and that's it. I mean, I remember, I've never shared this with you guys, but when I was raising capital in Canada for one of our raises, I remember we were asking for some amount, and the first thing that came, even from our current shareholder base, was, we got a CPC, Oscar. It's already got the X dollars you need. We'll get there. We got a BD, and we'll do it, and we'll do a reverse takeover. And I said, you know what? Why don't I just hand you the company right now? I'm out. Right? Because that's what you did the last time, right? So that's what happened so I've gone through that roadshow. So people don't understand, what do you mean? Well, the glitter is that they're showing you that 5 million or 3 million, but that's all you'll ever get. There's no more money after that. There is no, other than I call it the rourke. It goes zzz, and then zzz, and then, and I really believe in building companies up. And Eitan, this is not, and I know you deal with a lot of public companies. I respect that, but I also believe that we are given an opportunity to build companies, get more capital, get our revenue models figured out. Look, I'm on my 10th year, guys, 11th year, sorry. Only a few years with CoreConnect, and we're still trying to figure that out, right? We're still modifying, you know, Eitan, you and I talk about this a lot, right? So if we can get extra time, raise capital privately, build it up and sustain it and make it, and then think about that, look at that, we're gonna have better capital markets, we're gonna have better everything. So, and obviously I'm pretty pumped up in this. So thank you both so much for today. Eitan, as always, Kendall,
thank you.
I look forward to having you both once again. And I will remember that the quarterback, we're just gonna have a quarterback show. And just joking.
That'll be perfect.
Yeah, it'll be great. You know, March 15th is just around the corner, so I am pumped. For everybody else, thank you for being here with us this afternoon. As I said, the video will be on KoreSummit.io. Reach to us. We will give you a ton email address and contact details so you get it there. Or Kendall, these are individuals who dealt with Canadian companies. They know what you're looking for. And again, we'll see you again soon. Have an amazing week, everyone.